Up now, we have Forum Daily's market update with Catherine Murray, host of the Buck Stops Here.
Thanks, Dima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing markets move higher today to the tune of 1 to 2%. The TSX up by about 0.7% after falling 1.6% yesterday. Of course, it's been a very volatile week, and this really stemmed from SVB, the Silicon Valley Bank. Sunday night was backstopped by the U.S. government, but there's still so much concern in terms of the banking system and the implications from the unrealized gains on so many of the regional banks' balance sheets. So what are we seeing in terms of the impact from that? There are so many aspects and angles to this. For one, and why the market is rallying is because market participants are saying, hold on, U.S. Federal Reserve, at your next week's meeting, don't raise rates anymore. What you have been doing has been tightening the financial system to such a degree. So many people were really looking at, where's the system going to break? A lot of people thought it would have been within the consumer or housing. Of course, we've seen some weakness in housing, but the consumer has not broken. And in fact, what did break were the regional banks. And again, this is because of how they've managed their balance sheet. SVB is a bit different versus others. They went in long duration bonds and had significant unrealized losses on their balance sheet. So market is basically saying to the U.S. Federal Reserve, there's no way you can raise rates next week to fight inflation. Inflation has been moderating, and there's a lot of stresses within the system. That's why the market's rallying. At the same time, and what else have we seen from this? The FANG names, so the tech sector has really been outperforming over the past couple of days. Recall that last year they were pressured, the tech stocks were pressured by higher interest rate environments, putting pressure on the valuations. That now is reversing. We'll see it. Again, there's a lot of moving pieces and parts here, but also tech investors are believing that the U.S. Federal Reserve needs to have a pause next week. Having said that, the market is still expecting that they'll raise it by 25 basis points, but not 50. On that note, we did hear from the ECB this morning. They did raise their rate by 50 basis points, even though we are seeing stresses within the financial system, and they actually had a little bit of a hawkish tone as well. Other implications that we're seeing from SVB, Silicon Valley Bank, we are watching cryptocurrencies have a huge rally this week and continues to do so today. That is because many believers of cryptocurrencies and digital assets don't love the way the government's been running the system and have concerns in terms of fiat currencies. So you are seeing a real move higher in cryptocurrencies. Gold as well, it's up by about 3% for the week. You're also, however, seeing WTI under some significant pressure. It's rallying by about 2.2% today, but it does trade with a 6 handle on it. Call it about 65 is a level to be looking at. And that is because there are increased recession fears. More and more people are talking about a hard landing that the U.S. Federal Reserve, again, has tightened too aggressively. The U.S. Federal Reserve in 1 year has raised rates by 500 basis points. That has never happened unless you've seen inflation with a double handle on it. And obviously we're not in that camp right now. So very aggressive Fed tightening. And so on the back of that, you are seeing quite a bit of pressure and concern regarding the economic outlook. WTI is under pressure given the fact that there's concerns about a recession. But many would also say on the positive side as it relates to energy and WTI, that demand still outpaces supply. Away from that, a couple of important updates here on the financial system. There are reports that there's a group of financial institutions in talks to deposit about $20 billion into another regional bank, First Republic, which is traded under the ticker FRC. So we'll see what happens there. Because again, there's still stresses within the system and within some banks' balance sheets on the unrealized losses. And also, of course, the big news yesterday that kicked the markets to the downside was Credit Suisse needing to shore up some funds there. And apparently it is the Swiss National Bank providing about $54 billion. Just one update here as well on OFSI. They are officially winding up SVB's Canadian operations. Important to note that. And then also, just when we think about the potential for a recession, when you have tightening financial conditions, JP Morgan is saying that's probably going to take out about 0.5 to 1% of GDP. RBC is out there saying that they expect Canada to enter a mild recession in the second quarter or the third quarter. Goldman Sachs has a 35% chance of recession, and they have also cut their GDP forecast for the United States. And lastly, I'll just end it on this note, Nima. When we think about insured deposits in the United States, it's $250,000. In Canada, it's $100,000. There's a lot of pressure to increase that number.